Welcome to another Capital Gains Tax Solutions podcast, where we believe most high net worth individuals and those who help them, they struggle with clarifying their capital gains tax deferral options. Not having a clear plan is the enemy, and using a proven tax deferral strategy such as the deferred sales trust is an amazing way for you to exit highly appreciated assets and eliminate the need for the 1031 exchange forever, so you can create and preserve more wealth or help your clients, friends, and family do the same. Hey, we're also streaming on expert CRE secrets as well, so I appreciate all the commercial real estate people out there that are listening to us now on our YouTube and our podcast. Hey, I'm excited about our next guest. And by the way, for those who don't know me, my name is Brett Swartz. I'm founder of Capital Gains Tax Solutions and also the host for today's podcast. Each and every podcast, we have some of the best real estate, financial, wealth, and business minds in the world, where they share their ideas, deal secrets, and stories of how they help people unlock capital and unlock freedom with investments. And today's guest is no exception. In fact, he has over 20 years of experience of large-scale real estate finance, having raised more than $300 million in secure transaction. His primary role at Plurus is the development of strategic alliances with investors, the formation of equity partnerships, coordinating growth plans into new markets, and underwriting transactions. He has an extensive education and background, and we're going to talk more about that. Please welcome to the show with me, Rob Sechrist. Rob, how are you doing?
Doing well. Thanks for having me.
Absolutely. And for our listeners getting to know you for the first time, would you give them a little bit more about your story and your current focus?
Yeah, sure. So Plurus is an asset manager that specializes in private credit. We've originated thousands of transactions for billions of dollars between myself and the other principals in primarily value-add transactions. In 2014, our local Congressman Dana Rohrabacher passed the Rohrabacher-Blumenauer Amendment, which defunded the Department of Justice from any prosecution of a cannabis-related business. When that passed, we realized that this is the largest newly created asset class that we had the skill set to lend on. And so by 2016, we became the first dedicated lender to this cannabis use real estate in the country. And we have thus, then we created the first cannabis fund, the Plurus Fund, in 2018, converted it to a private mortgage REIT in 2020, got investment grade rated, and we have brought in institutional investors into some of our structured finance offerings. And today we're managing about 415 million assets under management, and we've raised and funded more than 500 million in just this sector alone.
Amazing. And we're going to be talking about financing cannabis investments. And if you want to take action right now, you can go to PolorisEquityGroup.com. That's PolorisEquityGroup.com. And I will spell that for you in case you are driving. PELORUS is how you spell Plurus. Rob, amazing. Before we dive into all of what we're going to be talking about today, which is financing cannabis investments, I want to take one other step back. I believe we've all been given certain gifts in this life, and these gifts have been given us to be a blessing and help to others. So I'm curious, what would you say is your number one strength or gifts that you believe you were given, and how does that help how you help and bless people today?
Sure. I guess that for me, I think that I'm good at understanding things from people's perspective and treating all people equal and listening to their story too. I think that gives you an advantage in understanding where they're coming from. And I think that that's a strategic advantage for both a company and an individual in understanding where things are at.
Fantastic. Listening and connecting with people in a authentic, real way, and treating everyone equal. That sounds great. Let's dive right into the topic at hand, which is financing cannabis investments. So Rob, what is the number one secret to financing cannabis investments?
Well, the number one secret that you would need to know is that you need to tie up the cannabis use license that may or may not be related to your borrower. So if your borrower is the property company, the PropCo, what we would refer to it, the OpCo, which may or may not be related, would be the tenant. And that value of that property is derived from that cannabis use license. So you must tie that up into the transaction. And it's a very technical and tricky way to do it. And it's different in every single state of how you achieve that. But that's the number one most important thing.
Okay, make sure I got that. It says you must tie up the license related to the borrower, okay?
Related to the operator.
Related to the operator, okay, related to the operator. And so it's I think in traditional finance, you must secure the loan to the asset, and the asset being, let's say, the real estate. And what you're saying here is really the asset, perhaps, is the license, right? You want to make sure you're
So,
secure. Walk me through that.
yeah. So to clarify, so we do secure first lien on the real estate, but in addition to that, to have the highest and best use of this highly specialized asset class that's most similar to cold storage, data centers, or lab space. In this particular sector, you must tie up the license as well of the cannabis operator, so that way you can operate that property at the highest and best use for cannabis business.
Okay. In other words, let's imagine they went sideways or weren't doing the things they should be doing in the way they should be doing with all the regulation that's around it. You've got the ability, I guess, correct me if I'm wrong, maybe to foreclose or take that over as an operator and start to run it in the proper way. Is that a fair summary, Rob?
That's correct. So it may or may not be us directly, but you want to be able to monetize that value of that property by putting in another cannabis use tenant to replace them.
Okay, makes perfect sense. We're talking with Rob Sechrist, and you can meet and connect with him at polarisequitygroup.com, polarisequitygroup.com. Okay, so that's the number one secret. Rob, what's the number two secret to financing cannabis investments?
Well, I think that there's so many different things because it's such a unique asset class. Trying to get title insurance, the same title insurance that you would get from any other real estate transaction is extremely difficult, especially for value add transactions, to get Alta policies for the size and scale of transactions that we're doing, to get all the coverage of everything that needs to go into place on these transactions. Every little nuance is a challenge, and it takes time to figure it out. It takes time to get the third parties to support it. It takes time to build the scope of work and procedures that are necessary to do these types of transactions. We've done 74 of these transactions for more than 540 million, with 39 payouts of over 110 million. So we've had our learning curve as well since 2016 to make sure that we continue to refine that process and to better improve it as you move along.
Okay, so it sounds like having the long, patient persistence to look at every detail and refine and improve on title insurance or insurance, and there's properties and zoning changes and law changes, and it's that overall. And by the way, that's incredible. 540 million, 39 payouts, and improving the process. Is that a fair summary so far, Rob?
Yeah, that is, and there's many more things that are nuanced of what is the kind of specialty sauce in this, but we're not going to give all that up. But I'm just kind of giving some high level ones that these are just some of the initial things that you'll run into day one. For example, most title companies is going to tell you that they can only issue a CLTA policy, and that's not worth the paper it's written on. So we would never accept that, and we've never had to accept that on any transaction since day one. But you want to continue to refine that, and we typically get 125% coverage, like we did prior to coming into the cannabis sector. You want to insure for more than your principal face value of your note. You want to include, attorney fees and costs that might be associated with collecting on that title claim. So there's lots of things that we've learned over our careers of doing 1,000 transactions, and we've just refined those and brought those all those best practices to this sector.
Okay, excellent. So now I'm getting to know you guys a little bit more. I can see that you're experts in the industry. You have the track record, and I'm piquing my curiosity now. And now it's moving from, okay, I might not be doing this by myself, but maybe I want to invest with those who know what they're doing. So what does it look like if you're an accredited investor to work with like a Polaris Capital Group? You guys raising capital? How does that look like? Maybe some general framework of some returns and what that might look like.
Yeah, so we're an open-ended fund. We admit capital on the first day of each month, make monthly distributions. We're structured as a private mortgage REIT to get that tax advantage. And that tax advantage, by the way, is a 20% reduction on the tax rate on your federal taxes, and you only pay state taxes in the state that you're domiciled, which is significant for no tax states. And then if you have a self-directed account, there's no UBIT on that. The REIT structure cleanses that. But basically, our fund is about 414 million assets under management today. We have a 1.5% asset management fee, an 8% pref to the investors, then an 80-20 split. We've achieved double-digit returns since inceptions. Our target yield is between 12 and 15% net IRR. And we've got 5 years of audited financials to show that performance, and we're happy to provide all that information. But basically, the portfolio is comprised of 32 transactions of loans across the country, all secured by first lien positions on a cost basis. We lend to about 60% loan to cost basis on our bridge lending product and up to 75% cost basis on our fully stabilized. The portfolio has 2 loan products within the one fund, which is one for the stable acquisition and stabilization of the transaction. And then once the transaction is fully stabilized, cash flowing, then we drop them down into a slightly longer 5-year term with a slightly lower rate. So that's basically what you're looking at if you're coming into our fund.
Fantastic. Let me try to unpack that too, because that was a ton. And by the way, rewind that and listen to that again, because that was amazing. And so 2 things. Okay, I want to catch on that. So you said open-ended, well, more than 2 probably, but this is the first one to start with. Open-ended. So maybe dive into that a little bit more. Sure. And you said it typically releases every 30 days. Walk us through that. Walk us through potentially the liquidity or lack of liquidity, or can you raise your hand if you need capital out? But before you do that, it sounded like 8% preferred return. I think I caught that. 80-20 on the profit share, right? So 20% of the upside, right? Or is it 80% for the investor?
Yeah. Yeah. So let me just kind of clarify some vernacular. So this is as an income fund. We're secured by loans, and we're deriving income. That income waterfall, the first 1.5% is an asset management fee. Then the next 8 goes to the investors for income. And then anything over and above that 1.5 plus 8 is split 80-20. And even in spite of that hurdle, we've achieved double-digit returns net to our investors since inception. And that our target is between 12 and 15% net IRR. Regarding open-ended, just means that the fund, this is a $1 billion offering, and today we're less than half of that full offering, and that fund is making monthly distributions. We're admitting capital monthly, and investors, can come and leave as they choose. There's a 6-month lockup once you've come into the fund, and after that, with 30 days notice, you can start to exit. That's basically it. There's one other kind of unique part to this fund, is that we also do have the chance of some profit sharing, and that might be where we have an equity kicker in the direct borrower or even the cannabis operator themselves. So today we have 8 transactions of our 32 transactions that have equity kickers in them, and in that scenario, if there is an option for warrants and we're in the money, then we would exercise that option, and we would split those profits 50-50 with our investors. So that is a ultimate, very unique way of coming into the cannabis sector, picking up equity with no downside for the cannabis operators, but yet being secured by the real estate, so you've got your downside protected.
Interesting. Okay, I'm going to unpack some of that more. Thank you for clarifying some of these things. So it sounds like you've been able to achieve double-digit returns so far. The target's 12 to 14. And again, I didn't quite catch the 80-20. Is the 80 on the side of the investor, or is the 80 on the side of the sponsor?
Yeah, so the net target yield is 12 to 15, and the 80-20 split is 20 to us, 80 to the investor for income.
Okay. And what has it averaged to, by the way, Rob, in the last since inception? What is the actual net returns to investors right now?
Lifetime to date is 14%.
Okay, excellent, great. All right, so you get, you have 6 months. You got to commit for at least 6 months, and then it's in 30-day increments. You can raise your hand and get maybe some or all of it out, if I'm hearing that right. And then so it's a debt fund, so there's no depreciation, right?
Correct.
It's just pure interest, right? So it's 1099 INT, I imagine. So it's taxed ordinary income tax, which you will receive, I imagine, or maybe a K1. You correct me if I'm wrong on that.
It's actually not. It's a qualified REIT dividend, because we're structured as a mortgage REIT.
Okay.
So that means that it's not ordinary income. The benefits again are you get a 20% reduction in that tax rate on your federal, and then you only pay state taxes where you're domiciled.
So pause there. Let me make sure we caught that, because I hear what you're saying, but I want to make sure I break it down. So let's say, imagine I made $100,000 from a regular, let's say, type of investment, 1099 INT. That's all $100,000 ordinary income. Now I make $100,000 with your structure, right? Are you saying that automatically it's like getting $20,000 of a tax credit or a reduction? Or walk me through what those real numbers mean.
Sure. So on ordinary income, I think the tax rate is like 37% or something like that. So on your federal taxes, you would get a 20% reduction in that tax rate. I think it takes you down to 28 or somewhere around there. Or it's a 20% reduction in that. And everybody's tax rate is different for where they fall. But what it's actually doing is it's adding to your after-tax net returns. You're picking up about 1 to 2%, just depending on what the scenario is or what the net yield was, just from the tax advantage relative to another fund that didn't have that tax rate. And then on the state tax side, you could be saving, if you're in California, 13% on your taxes. Well, so California doesn't matter because we're taxed here, but relative in other states, relative to California, you could be paying 0 taxes, and our fund is out of California, so you're not paying taxes out of California. You're only paying the taxes where you're domiciled. So the point I'm trying to make is you might pick up another 13% there.
Here's the key, right? And why we love bringing on people like Rob is he structured it in a way to be tax flow efficient as well as cash flow, productive, right? So not only are you achieving double-digit returns consistently in a fund that's been proven with a background extensively in commercial real estate and thousands of transactions with the team, but now you're taking it to another level within the cannabis industry. So now let's walk through some of the common questions, Rob. And by the way, if you want to take action right now, you can go to PolarisEquityGroup.com, PolarisEquityGroup.com, right? Someone might be saying, oh my gosh, cannabis, like that's kind of scary, Rob. Like, am I getting into stuff that's, on the edge? And I mean, walk through the industry, where it's at today, the regulation, and all of the amazing things that it's doing for people that have health challenges.
Sure. So just to clarify, we're just a real estate lender, just like any other commercial real estate debt fund is out there. It just happens that the particular use of property that we lend and focus on exclusively is cannabis use property. So this is no different from there. It's just we're able to get additional collateral and other pieces and add other pieces to our transactions that other funds wouldn't be able to necessarily get or have the knowledge base to do it. What is kind of the most misunderstood part about cannabis is that first of all, the Department of Justice has been defunded from being able to prosecute. So there's no ability, regardless of if the executive branch is pro or against cannabis, to be able to enforce anything. And that's been through 3 administrations that there's been no ability to do that. And there's that bill, which I referred to in the beginning of this podcast, the Rohrabacher-Blumenauer Amendment, is now in the omnibus spending bill. So every year that the budget is passed, that resolution gets passed again. So you have no issue of our borrowers' tenants being prosecuted and thus potentially losing that value from that tenant. So that's number one. The other side of it is that there's a big misunderstanding that there's no banking in the sector. And the reason that there's no banking is because credit cards are processed on the federal system. So you get the buildup of cash on the very initial transaction of $25 to $75 in each of these dispensaries. But in reality, there's 684 banks on FinCEN's website that are cannabis depositor relation banks, which is about 15% of all the banks in the nation. And that's down from 702 the year before. Of the 2,000 transactions that we've underwritten, we've never seen a PropCo or an OpCo not have banking in place. So it's a big misunderstanding or misnomer that there's no banking. Any bank can deposit cannabis deposits if they want, but they have to have the compliance department in place to be able to do that. And it's different for each of the states that the cannabis businesses are legal. And so if the bank was to get it wrong, the downside is so massive that it's just not worth it unless you built that compliance department. And 684 banks have gone ahead and done that. So there's ample banking. Those are both federally chartered, state chartered community banks out there that are FDIC insured.
Amazing. All right, we're talking with Rob Sechrist with Polaris Capital Group, or PolarisEquityGroup.com, PolarisEquityGroup.com. So yeah, you are a you're a cannabis lender, like a real estate lender is lending to real estate. You're lending to the real estate with the cannabis, right? And also maybe the operations as well, as it comes down to. So, Rob, this has been fantastic. Are you ready for the lightning round?
Let's try, buddy.
Okay. Knowing what you know now, Rob, if you could go back to your 25-year-old self, what's the one golden nugget to make sure to tell yourself to do?
Well, I think the number one is, don't have imposter syndrome and try to scale your business in a meaningful way. Sometimes it takes time and you need to make mistakes at a smaller level so that you don't make mistakes at a large level. So part of the process is making mistakes.
Excellent. Question number 2, what's the number one book you've recommended or gifted the most in the past year?
Oh man, geez. I listen to podcasts, so I don't even think I've read a book in the last year.
What's the top podcast that you recommend or give
I like Joe Rogan a lot because I can pick and choose through there who it is that I like to listen to. And he's just got that long form format. I think it's just such a great place to be able to really hear all the way through the different nuances of different ideas and thought processes.
Excellent. Question number 3, what are you most curious about right now?
Oh man. What am I most curious about right now? I think in this sector, and we're continuing to try to push that through our relationships throughout the industry. And happy to talk more about that. But I do believe that this sector, the cannabis, the legal cannabis sector, can hopefully offset some of the opiate crisis out there and give people an alternative to just utilizing opiates for pain relief.
Absolutely. Excellent. What would you say is your biggest frustration when it comes to the 1031 exchange or these big cannabis businesses that want to exit for $50, $100 million, or, a big primary home in Orange County that's not eligible for 1031 or stock or crypto? There's none of it's 1031 eligible, right? Except for investment real estate. What would you say your biggest frustration is with that, Rob?
Yeah, I think there's a couple of things. One is that it's a hard sector to understand what your alternatives are out there. And 2, timing of those assets is not necessarily congruent with the investments that you're trying to find. So you might be in a 1031 exchange that you've got to find in a certain period of time. It might not marry up, or you may not be an expert in finding those. So I think there's just a lack of information out there.
Absolutely. And by the way, we have a solution for that. You can go to capitalgainstaxsolutions.com. If you're wondering how to exit a cannabis business, exit S Corp, C Corp, LLC, primary home, you want to just be done with commercial real estate right now and maybe invest into like a finance fund that's financing to cannabis business or diversify your wealth. We have a special strategy. It's been going on close to 30 years. We're expert on it. It's called a deferred sales trust. And we want to help you understand what it is and how it can eliminate the need for the 1031 exchange, eliminate your estate tax. Go to capitalgainstaxsolutions.com. That being said, Rob, last question. How would you say what would you say is the number one practice that you try to do or practice that helps you stay centered in your values and stay encouraged to charge forward to reach new heights?
I think that's pretty easy. So I think that if you are able to stick to your core principles, it makes making decisions, however difficult they may be, much easier and simplistic to just following those core principles. And I think that life would be a lot less challenging if you just operate by what your core principles are for you as an individual, because then very difficult decisions, there's a very clear path. It may not be easy to make that decision or to go through with it, but if you follow your principles, you know where to go.
Amazing. Hey, Rob Sechrist, I want to thank you for being on the show. I want to thank you for sharing a ton of wisdom with us, opening us up to a new opportunity to invest. I want to encourage you to keep using your gifts of listening great, treating all people equal, and making a difference in the cannabis industry. For our listeners who want to get in touch with you, could you remind them one last time what's the best place for them to find you?
Yeah, so they can contact us at IR for investor relations at Pelorus, PELORUSCG.com. Is by email, or they can go to PelorisEquityGroup.com, and I'm sure you'll find us when you Google us. We've got lots of stuff up there.
Amazing. Thanks so much, Rob. And I also want to thank you, the listener, for listening to an episode of the Capital Gains Tax Solutions podcast, also streaming Expert CRE Secrets as well, where we believe most high net worth individuals and those who help them, they struggle with clarifying their capital gains tax referral options. Not having a clear plan is the enemy, and using a proven tax referral strategy such as the deferred sales trust can help you eliminate the 1031 exchange forever. Open yourself up to opportunities to invest with groups like Polaris Capital Group to be able to diversify your wealth, make those double-digit returns, and really, maybe not have to deal with all the toilets, trash, and liability yourself. And so if we can help you at all, we'd love the opportunity to help you. Go to capitalgainstaxsolutions.com as well. Check out the new book, Building a Capital Gains Tax Exit Plan. We have the Kevin Harity from Shark Tank in the book and a bunch of other multifamily operators and financial advisors. And so check out the book, Building a Capital Gains Tax Exit Plan. Thanks so much for listening. Please share this with someone it can be of help to.